You've put out a piece recently on the high-frequency data, very recently, in fact, Chetan. What are you seeing in this US economy and the deceleration into year-end?
Well, John, we expect a softening of growth in the fourth quarter. So the tracking indicator is showing that the fourth quarter will be about 4.3% Q-on-Q annualized. And then even in the first quarter of 2021, we're expecting GDP growth to be around 3.5%. So growth holds back in the winter, but we see a resurgence from March, April onwards. That will take the US GDP growth to 5.9% year-on-year growth in 2021, John.
Chetan, what stands out for me, looking at your research and where you've been an outlier, which ultimately led to you getting the right call, was the degree to which private sector risk appetite would be reduced off the back of what has happened in the last 9 months. Are you seeing the same thing again?
Yes, absolutely. I think we got the whiff of the private sector behavior in the third quarter, John. As the restrictions were removed, we saw a sharp rebound in consumption as well as even the investment indicators. And we're expecting something similar to come through in March, April. Look, I think vaccine is one aspect, but our biotech analyst, Matthew Harrison, is indicating that you will see a roll-off of new cases in the month of February, just by the fact that the weather will be changing and it will alter our behavior to be more out instead of being indoors. And then vaccine itself will be quite helpful. And when we are analyzing the vaccine impact, we are looking at vaccine being available to the vulnerable sections of the population. You don't need to achieve herd immunity to keep the economies open. And I think that's probably the most important aspect about vaccine to be considered, John.